presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is a Tom O'Brien show, 3 o'clock till 4 o'clock, and we're looking at this Eastern time, of course, and we're looking at a fascinating session. Look at this. Here's the Dow on the left. So I have the Tiger Technicians Hour, 10 o'clock to 11 o'clock each market day. I also have the opening call daily newsletter, very detailed newsletter goes out about between 8 and 8:30 every single morning. And then on a Friday afternoon, usually it's a Friday afternoon, otherwise it'll be a Saturday morning, but it's usually Friday afternoon. As the market closes, I start doing an overview. It's a weekly overview, and it's basically looking at positions that we have, positions we want to get, the market itself, what we're looking at. It's really like a webinar in a way, because I talk about what we would like to buy. For instance, last week I spoke about certain stocks. This week we put them into action. So far they're working out very well. You never know. We'll see what happens. I've got one that we bought yesterday morning, I believe, or the day before. Anyway, we just recently bought it. And earnings are coming out today. So far it's up, but you never can tell. I love the area that it's in, et cetera, et cetera. This is a period to be looking at specific areas. For instance, robotics, the data centers, the energy expended is just immense. So how companies are dealing with that. Just a lot of different things. All right, let's go through the numbers. Dow's up 70 at 45,637. Just an eye blink away from the 45,057 all-time high of the 22nd, just 5 sessions ago. Walking, this is how I look at the green 9-period moving average right there above the 14-period black line there. Let me just get rid of this. It's messy. Above this, don't get rid of that. There, remove. Yeah, so this black line right here, so these are basically support levels, 45,269 and 45,094. I'll just say, if by the first week of September, even maybe starting the second, if the Dow is closed decisively under 45, we've made at least a short-term top. Right now, everything's still pretty good. Daily is good. Weekly is very good. The monthly is still very good. Monthly candle finished tomorrow at 4 o'clock. Let's go to the S&P. We will have Tim Ord, so there's a lot to discuss here. Let me just get this done. So we are still long the Dow. I had a couple of short positions recently. Worked out a little bit, but it was very brief, and we're back to long, only long positions. The S&P has broken out in leg C in the Chapman wave. That suggests that there could be a peak C, meaning a lower high, whatever this leg C stops at, and then a leg D, and then you've got to be a bit careful. But the weekly chart has something very different. A very quick peak C, 1 bar rest, leg D, then a peak C, 1 bar rest, and then now we're in leg E. Usually this little cluster of a very quick C to D to E says you've got to be a little careful, because you could pull back at any point and not necessarily have a sell signal or anything like that, but you've got to be ready for some kind of a sudden dip. And then the monthly chart is very strong. Looking at, and the support level will be at 6,453 and then 1,435. Those are the 9 and 14 period moving averages on the daily chart. The QQQ. Now, this is fascinating. Look, QQQ hasn't made an all-time high yet. It did on the 13th of August, 583.42. Slides all the way down to the 560-ish level. Now it's at 577. Strong candle. 9 period. This is a technique that I teach to my subscribers. And when I have webinars, when the price falls very sharply, if that green 9 period moving average holds, doesn't go pink, pink would be negative, it holds positive, that's usually good for a really strong rebound, and that's exactly what we're getting. Unfortunately, the MACD, the moving average, is still weak. The relative strength is weak but rallying. Stochastic's way down at 56. So this is a work in progress. So this is one that's struggling a little bit. How it and what it does, if it can get to the previous high, we'll see. But the weekly chart is absolutely fantastically strong. Only a peak B. And in a buy mode, you should go to at least a peak D, 4 higher peaks. Let's go quickly to the IWM, which is now catching up. It was weakening earlier on, but having made a new recovery high. So this is another Chapman wave technique. It's called the Chapman wave instant restart. We're within 3 bars after peak D. Makes a new recovery high. It means immediately start thinking E, and then in your mind you can say /A, and then F/G, and then G/C, and that could even go to a D. Meantime, at 236.97, it's just a hair away, finally, from the 244 double top from November of 2021 down to 161, then back to the November of 2025 244 level. I believe it's going to make a kind of a V-shaped cup and handle pattern getting to that level in the next couple of weeks. Let's go to SMHs real quickly. There's just so much to do because we want to be prepared for Tim when he comes on. So the semiconductor is up 2 at 299. Let's call it 300. Trying to get to the 302.98. Now, unlike the QQQ, this is just an eye blink away from making an all-time high. That'll be 1 penny above the 302.98 high of the 13th. Starts a leg D. Remember, what's the obligation in the Chapman wave methodology to get upgraded from a buy signal to a buy mode, implying should go to at least a D. And the monthly chart is still very strong. So this is all very good. Let's go to gold, GC. So we are long. We are along the Dow. We are long gold. It's doing very nicely. Here it is at 34.77. It's just broken an initial resistance level. It's in the rectangle that I said. Be careful. This rectangle, you can say, my expression is a rectangle can go for a much longer time than your patience, and it keeps going to the resistance level and then down to the support level and back again. Well, it's holding very well, and what's even more important is that the GDX finally just snuck above the high of the other day. That was 61.60. Today's high is 61.62 by 1 penny. That changes its notation to a G/C. This is really very positive right there. G says, oh, be careful. C says, what are you talking about? Should still go to a D. So this is very positive, and I don't want to spend time, but I'll talk about, if I have a chance, I'll talk about this when we get back. The weekly GDX, how it broke out, that's very positive. Silver, as we go to the break, silver's doing very well. Oops, quickly, here we go. Silver. Yes, very nice. Our silver stock, CDE, core mining, is almost at a multi-year high. Very.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality
is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. The Dow is up 68, S&P's up 21. I'm looking at silver, 40.43. 40.42 was the high earlier in July. 40.43 will start the leg D in the weekly chart. Then I think you've got to be a little bit careful, but so far silver's acting really well. As I say, we still got our long position in the silver stock and it's doing well, same as the gold. Now, Bitcoin. BTC. Bitcoin is trading up today a little bit, 810 at 113,055. I believe it's made some form of a double top, 123,615, 14th of July, and 125,200, 14th of August, and now we've gone below the cup formation support. I think that this is in the weekly chart, I've got it as a peak C. I'm suspecting there's going to be one spike to the upside, not very much higher than the 125,200 area. And then I think you got to be careful. But we're so long, IBIT, that's the iShares, from quite a bit lower. And we're just holding that position for now, taking some profits off. And that's how I'm looking at it. I want you to also talk about the XLF. The XLF is the S&P Select Financial Spider Fund at an all-time high yesterday, just under it today, a leg E. And you can see this technique that I developed a long time ago called the Chapman Wave Inside Track Repellent Zone. Look how it's repelled the price every single time it's got there. But I do have this, and I'm going to just show it briefly. I'll do a little bit more tomorrow's Technical Friday for my show, the Tiger Ignitions Hour, Friday at 10. And I'll go through some of these. But you see this XLF, the pink is the XLF, and the blue is the SPY. Monthly chart, that's all it is, the bar chart. I had shown that this made a perfect 1-to-1 to the upside, and then a perfect, this what you can call in the lightning bolt pattern, the B to C, and then the D to X on the way down was just perfect. Once you broke out to all-time highs, that's something very different. Now, what's really important is that I believe now we're looking at the XLF being like the IWM has come on very strong. It's starting to act very well for the first time. The small caps, the 2000, Russell 2000, so the KRE now it's in its own, finally. Look at this. Look how strong that is. That's a really nice move to the upside. So that's the regional S&P regional banking ETF. We waited a year or so for it to start to pick up, and now it's in its own. And I think the next few months will show that this is going to probably go first to the left side high, which is at 69, or is it 70? 68.56 made in November of last year, and then the all-time high of 78.81. That's the way I'm looking at it right now, so that you're seeing a rotation going on. And you can see the rotation. Look, General Electric struggling to get back to an all-time high of August about the 13th at 281.04. It's doing well, but it isn't really leading. Robinhood acting very poorly lately. Robinhood is trading at 103. It did 117.70 on the 12th of August, and now it's kind of rolling over. The other one is Microsoft, and we are long from way down all of these three positions, but I'm anticipating that this is telling us that there's a form of a rotation going on right now. 555.45 all-time high for Microsoft. On the 31st, we're along from 338. We've got a small position left, and it comes all the way down to where it is now at 509. That's look at this peak B. That's a pretty big dip. So I'm just saying that this is a phase that is very interesting, because we're starting to see some kind of rolling into, look at this Caterpillar. This is a hugely cyclical stock, and it's trading a little bit off its all-time high. It's trading at 434.71 up 2. That means PAVE. This is the PAVE is the ETF, the Global X U.S. Infrastructure ETF. Look, almost all-time highs. So you can see that we're looking at a market that, in a sense, is starting to see a rollover with some of the tech sectors struggling a little bit, or the leaders. And now you're starting to see something else. Look, this is ARC Innovation ETF. Very nice, doing well from the low that was made in 29s. Of course, this once was up in the way up in the 125 area, but it's coming back. It's at 75. So what I'm saying is, this is a very interesting, as long as you've got a rotation that says, as something that has been strong takes a little breather, something else that has been weak can lead. I think that that's very, very important. One thing I want to look at, let me just look at my notes. Did that. Yeah, the TLT. Look, the TLT, just sideways. Look at this weekly chart of the bonds, iShares Treasury Bond ETF. Just sideways, H goes to an M pattern, lowercase m. But look at the TBT. The upper end means yields are still up at the higher end of the range. They're not breaking out to the upside or the downside. They're just kind of stuck there. So it's kind of off the table, bonds. They're not as important as they were. But there's still something to keep in mind. The AI area. This is the artificial intelligence, almost at an all-time high at 45.53. Global X artificial intelligence. I mean, we've been long this. I mean, just look all the way back here to 2024. Taking a little bit, we have a core position and we've had trading positions, but I'm watching this closely. It's the area that says at 45.77, the last high, which was the all-time high. You want to see this up in the 47 to 48 area sometime mid-September. That'll say, great, continuation pattern. Otherwise, you can go sideways. Doesn't have to drop very much. 43 could be good support, maybe 42. But I'm just saying that this is a very interesting phase, because once you start to get one particular leadership set of parameters that start to stall a little bit, and as I say, I consider GE, that's a major cyclical in the economy. I consider Robinhood. So this is something, an area that has both the layperson getting into the market. It got all the features that I look at, that the broker dealer sector very often leads the market when the market's making new highs. So it's just stalling a little bit, taking a breather. And Microsoft, it's not doing badly, but it does look like, I mean, if you look at the weekly chart or even the monthly, but on the daily basis, that's 10%, almost a 10% correction. That's big for Microsoft. So I'm just watching it very closely, and I'm saying this is a time that you can start to see some of the biotechs. I'll just grab one that popped up on my Screamer list under stocks under $10. Look at this monthly chart, horrible. Weekly chart, horrible. Daily chart has gone to a leg D to the 200-period exponential moving average. And what am I looking at? Stock that I hadn't really looked at for a long time. Cura Oncology. It's in the solid tumors, cancer tumors. Goes from the $5 area to the $8.53 to the 200-period moving average. Seeing a lot of these. So money is flowing into the market in the low-cap sectors. I had one other thing that I needed to talk about. Did that. Yeah, look at this. Tesla. Tesla's stalling in this rectangle formation. It just hasn't yet broken out. If it does and gets to the 328 area, that'll be very positive. It can stay here a little longer. Hasn't broken down, but it just hasn't broken down. I'll be back in a moment, and of course, I will have Tim Ord interviewing Tim Ord as soon as we return for the next half. I'll be right back. Basil Chapman sitting for Tommy O'Brien. S&P Dow's up 67, S&P's up 20.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and I am the author of the Opening Call Daily Newsletter and also the 10 o'clock Tiger Technicians Hour. And just before I forget, I was asked about ETH. So while I was talking about the S&P and the small caps, the relationship, and the XLF, the select financials, and the KRE, the regional banks, how there's been a rollover and the smaller ones are starting to move nicely. So I wanted to just show you that the BTC has been kind of negative lately, but the ETH, which is Ethereum, has taken the lead. It's that same relationship, and it's doing very well. It's trading right now at 42.18, down 83. It needs to get into the 45.60s to really, if it doesn't do it this week, it'll be doing it next week. That'll be leg D, but so far it's holding very well. Now I want to go to Tim Ord. Hi, Tim. How are you?
Good. Glad to be on again. So we're heading into a 3-day week, and things may get a little choppy here going forward. This is chart 1, which is the SPY. We showed this last week because Tuesday we weren't on the air. But anyhow, we had a support area between, actually let me get a draw tool here. We had a support area between basically 635, 640 area. That's where all the panic happened in the ticks and trend, and that blue area are the closes of the ticks and trend, which is in panic area, and panic only forms at bottoms. That's the reason why that's a support area. I bought a little bit too quick, but we did get long, and we're still long right now, and the market's moving up. I don't know, going into a holiday, I guess it's pretty good. We're not screaming up, but we're actually inching up. The bottom window is the VIX. It looks like, we're right smack at the lows here. We're like 1422 or 14.22 right now, which is extremely low, which is bullish. So where are we going? Well, let's take another look at chart 2 here. This looks at the bigger picture. The top window is the VIX. Next window down is the SPX-VIX ratio, which basically trends with the SPY. So as long as this SPY-VIX ratios or SPY-VIX ratios going up and the SP is going up, everything's hopeless copus, I guess you might say. And we've been having that. The green areas are times when both of them are going up. The red areas where the SPs are going up and the ratios going down. They picked out that high back, I don't know, last year. That was a bearish situation going into the February highs. SPs were making a higher high. That ratio was making lower highs. Since then, basically, this is a short-term view over the last few days. So far, we're SPs making higher highs, and that's confirmed by the SPX-VIX ratio making higher highs. So everything looks good, right? So we're going forward. Market's making higher highs. The SPX-VIX ratio is making higher highs. Well, here's the drawback on that. Now, this doesn't pick out. This looks at the bigger picture, so it doesn't pick out a week or two decline. It basically looks at the bigger picture. So it's going back to July of last year. This ratio was going down as the SP's going up. Well, you had about a month decline, and going into the February highs of last year, you actually had a 2-month decline. So what this is saying here, in general, you may have a pullback, but it's not top of any consequence. So that's what the SPX-VIX ratio or the SPY-VIX ratio says. So you can have a pullback here, and this may not show up to be bearish, but the pullback should be mild. So let's flip to another chart that looks at the shorter-term picture. And this is, I talked quite a bit about this. This is the SPX tilt ratio. So it's another ratio, but it measures the bond market against the equity market. And this ratio leads the SPY. So if this ratio is going up, right there. Then it kind of warned of a pullback right here. If this ratio is going up and the SPs are going up, everything's fine. But this is more short term, so you can have a week or two of pullback, and that's what we may have here going in, where the bigger trend's bullish, but a minor pullback may form here. And the minor pullback I'm talking about is around this 62 on the SPY is 620 area. On the SPX is around 6,200. So I think that's probably what's going to happen here. I think the pattern that's forming here is a basically rising wedge. The market goes up, makes higher highs, higher lows, and goes up. But the volume, as it makes higher highs, makes lower highs. And that's what I think is going to happen here. Some sort of a pullback. This is a rising wedge, and we're probably going to go back down. Rising wedges have pullbacks where the pattern began. And in this case, the pattern began around 6,200 or 620 on the SPY. I think that's probably where we're going to go. I think tomorrow is up because seasonality going into Labor Day, the most bullish day of the week going into Labor Day is Friday, which is tomorrow. So you probably may hit the upper band here, this upper trend line, maybe tomorrow. But I think tomorrow we're going to probably be high, if not high tomorrow, first part of next week. And I think we go back down. Nothing real significant, but 645, 650, possibly around the 620 area. So I think that's what's happening. And I still think we're going to go into a trading range. If we go back down here, we'll probably rally again back up. But I think in general, we're going to move sideways probably all the way into October. So I think we're in the midst of starting of a trading range. Bigger trend remains up. This sideways pattern that I think is going to form, and it may change, but it'll just be a consolidation or an uptrend. So that's what it kind of looks like. Nothing. I'm still long here. But tomorrow is going to be a kind of a key day. I'll be looking for information to get out of the market because I think 620 is probably maybe even 610, which is down here, which is basically the highs of February. I think we may test that. So kind of a slap in the face on a short-term basis, I think is coming.
What would you be looking for at the end of the day to make that decision?
Ideally, I'd like to see like a bunch of uptick readings on the close. But seasonality actually turns bearish next week. So, but ticks, kind of a surge in ticks on the close would be ideally something like 600 or 800 upticks on the close, and volume be lighter than what it was today. So if you notice, probably volume is not going to be reaching what it did yesterday on today's rally. And that's how rising wedges form. I hear the music.
But Tim, that's also because it's the holiday, and it's certainly the very, very low, usually it's very low volume at this point. Yeah. So we'll be back with Tim in a moment. Got a break coming up. Dow's up 58, S&P's up 20. Basil Chapman sitting in for Tommy O'Brien. Tom Ward from Ord Oracle on the line. We got a break. We'll be right back. We'll be looking at gold, I'm sure.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien, and this is the Tom O'Brien Show. We're on with Tim. This is Tim Ord from the Ord Oracle. Check it out. Go to check it out on the. You can check it. I think you can go to. How can they get you, Tim? Through
www.ord-oracle.com. That's my website.
Good. Great.
All right.
So the next chart you'd like to look at?
Yeah, we're going to look at the gold market. See, actually, I was short here. I covered my short, had a loss. And I actually want to show you the reason why I shorted. So this is the same chart I presented last Thursday. This is GDX GLE ratio, and the top window is the RSI for this ratio. And I marked the times when the RSI got 70 or higher, actually above 68. We had a RSI last Thursday at 7.57. And that's one reason. I usually try to have at least two indicators that are not related to each other to show, to validate the signal or confirm the signal. So that's one. So the GXGLE ratio, RSI, got above 70. That's usually the red lines going back across this chart are the times when the market produced that RSI. Next chart is the this is Martin Pring's inflation-deflation ratio on a weekly time frame. So this is a weekly chart.
About him for a long time. He used to be quite important in the market news. Yes. So what does that tell us?
Yeah, this is Pring up here, inflation-deflation ratio. I don't know actually how he got that ratio, but it works pretty well. And so the dailies don't work so well, but the weeklies seem to work real well. So I put an RSI on the weekly time frame. So this is a inflation on a weekly. So when the RSI gets above 70, and actually the week before it did get above 70, and that signals are pretty rare. So you don't even get, you're lucky to get one every 2 years. Last time the signal was generated was 2022, and no signal was generated until this recent one. So they're pretty rare.
Something like Marty Zweig's indicator that comes very rarely, but you got to take it seriously when it comes.
Right. Yeah. So anyhow, that's another reason why. So I have two reasons. I got a daily RSI on the GXGLE ratio, a weekly RSI on the inflation-deflation ratio. So I'm sitting pretty comfortable. So now I put a third one on. This is last Thursday's deal. This chart goes way back to 1988. And shows the RSI just on the XAU. And so those signals are pretty rare too. You get one every couple of years, 3 years, or none were occurred between 2008 to 2020. You didn't have any. So anyhow, you got an RSI at the time I did this chart. It was up around 77, 76.38 be exact, and we're testing the previous highs of 2010, 2011. So quite a bit of information that the market's going to run into trouble. So shouldn't you stay short or what? Well, here's another indicator that blows everything out of the water. So this is another chart. It's pretty rare to get a signal on, and actually, I always said in my newsletter that momentum rules all indicators. So I do, and the two indicators I'm talking about are actually momentum indicators. The bottom window is the GDX advanced decline with 18-day average. Next window up is GDX up-down volume with an 18-day average. So it measures the advanced decline that are stocks in GDX and measures the up-down volume in stocks in GDX. So it measures basically the strength or weakness of GDX through volume through advanced decline. And this chart goes back to 2014, and I marked all the times when both indicators got above 40. Trying to get my mouse to work there, but anyhow, we hit 40. I think I made this chart yesterday. No, I made it today. Yeah, I did make it today. So we're still at 40. It was around 44 yesterday, and one below it. Today's on Tuesday we hit 39.48, so close enough, 40. So both indicators hit above 40, and I marked the other times going back to 2014, and we have 1, 2, 3, 4, 5 times, not counting the current time. Of the 5 times, we had one failure in 2023, April 4th, 2023. We had a 42.36 on one indicator, and the other indicator was 45.98. And actually, it did go up a little bit, but basically the market went down. All the other times, the market just hesitated, and sometimes hesitation was very brief, but these are initiations of a surge to the upside. All previous times, the market surged on this particular example in 2016, went from February to August, so went another 6 months before the market topped. And this June to August period was a 3-month rally continued. This one here back in 2020 went from October to April of that year, and this one failed. So we're back above again there. So what that works out to be is an 80% chance, since there's only one failure going back to 2014, there's an 80% chance that the market is about to do a surge pattern. So in a surge pattern, previous ones went from either 3 months or anywhere from 3 months to 6 months. So even though there might be a hesitation here for a week or two, this is not a top of any consequence, but a surge pattern is coming probably in the next several weeks before, I'll put it this way, before the year's up.
Can I just clarify for a moment? We're talking about the sector, gold, the sector that includes silver for this breakout?
Yeah.
Okay.
I'm talking about GDX doing a surge pattern.
Right.
Yeah. So this chart up here is the GDX. This is a daily GDX graph. This one up here, what's going on right now. There could be a hesitation here, but this is not a top of any consequence. What this chart suggests that the market's in a surge pattern. There's so much strength in the market, it's very rare to get the advanced decline indicators and up-down volume indicators above plus 40. Previous times it did that, the market surged over the next 3 to 6 months. Even though there could be a mild consolidation, the consolidation is probably maybe 5%. Put it this way, there's not a 15% or 20% decline forecasted. 80% chance there's not a worthwhile pullback forming here. Market more or less is probably going to stay in this region and may consolidate a little bit, but not much according to this chart. And so this chart is a momentum chart of advanced decline and up-down volume. When it gets this strong, it suggests a surge pattern's coming. So this market's not actually going to get weaker; it's probably going to get stronger. Now the the majors, like the Newmont Minings and AEM and all of those, they may consolidate, but the juniors are probably going to take hold. That's what I've been kind of forecasting. That's what's in front of us.
That is fabulous. Thank you so much. Your information is just invaluable. We all appreciate it. We thank you for being here. And Tommy will interview you on Tuesday when we're back from the long weekend holiday. Thank you so much, Tim. Have a great weekend.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. It's the Tom O'Brien Show. The Dow is up 88, the S&P's up 20. And I just wanted to mention, so I'm sorry I can't see, I can see Tiger YouTube, but I cannot see anything for the Tiger Into the Den. I apologize for that. I just wanted to show you here, I've got the E-mini, the 5-minute and the 10-minute. And remember, I had the whole thing I sent out to the Den earlier on about this rectangle, how if it breaks above it, the further it goes above the rectangle, the more important it is. So we've done that, and now we've got a move that's gone to this leg F. We're going to see if it holds. But I mentioned I'd also texted earlier, I had a question about during my show, is this going to be a 2-click session? And the Dow was, I think it was at about 64, 70 something or 80. And I said, if the 9-period moving average crosses green, you might be able to hold it all the way through to the close, but you have to see what happens. It could be volatile. Well, it was volatile, but it did. It held the 200-period moving average, the 10-minute E-mini S&P, and to this very minute, it's still green, and so is the 5-minute green. So I'm just going to say, if you did that and you wanted a 2-click session, this is the moment that you have to take something off and keep something, because there's a chance with this Chapman wave 352, that means at 3:52 p.m. Eastern time, just 8 minutes before the bell, if the S&P does certain things, it can have a move that goes right into the high of the session. But to do that, it has to, right now at 65.20, it has to get to 65.24 in the next minute or two, and then it can do that. It's just another technique that I've developed over the years. Now, let me just go this, just a recap. So, as I see it right now, we are still long and holding long position in the Dow. We are still holding along the gold. We are along silver stock. We are along the bank area via Bank of America, which has gone to an exact double the previous high, within pennies of the previous high, after plunging and coming all the way back, all-time high as we speak. So this is a very important moment. Bitcoin is just taking a bit of a rest. Basil Chapman signing off. Check out my opening call daily newsletter, and I will see you tomorrow. Tommy will be back at 9 o'clock. Have a great evening.
Building